On Friday, gold and silver had a huge crash on the downside, having many people ask the question, what's next? There's so much going on in the markets. Let's not waste any time to get to it. I'm Patrick Ceresna. I'm actually live in Mexico City. I'm spending the whole week here with my inner circle. We're trading live together, and it's going to be an awesome time. So you see a little bit of a different background in here, and I'm live in a room with all the members while I'm actually streaming out here. It's going to be awesome. But let's not waste any time. We're going to do these all morning. The one morning I take off on Friday to not doing one of these live streams, I'm on a flight and gold and silver make these moves. It's unbelievable. I get off this flight and I'm looking at what the hell is going on. But let's dive into this chart and actually see what's happening. First of all, obviously, let's start with gold. And gold had that epic run up to 5,600. The one thing I was emphasizing to many of you on YouTube, as well as to my members, was that when security, any asset, goes parabolic on the upside, the hardest part to predict is the price level, but the easiest thing to predict is actually time. And time, when things are going parabolic, means that the reversal was likely to happen in a very short window of time, like within a week. And it, like clockwork, happened. The top came in there on gold, and we virtually retraced back to the 50-day moving average down near 4,600 within one session. Just an absolutely insane $1,000 reversal in gold in one day. So is it the bottom? Is this that opportunity? And odds are that it's not the bottom, but the bottom is much closer in one day than it was obviously on Thursday of last week. Gold potentially can, during a distribution cycle, make it even down to 4,000. But if we were down at 4,500, so we have 1,000 points rear view mirror, and potentially 500 more that could emerge on the downside before we see price stability. The one interesting thing is that when I show the chart here on gold volatility, this continues to be the big tell. We're seeing implied volatilities. We were almost at 50 implied vol on gold. This is something that I was highlighting as a big warning sign to markets. Essentially, gold crashed higher. Normally, when you see volatility spike, especially associated with the stock market, it's during a crash to the downside, that left tail risk that the market typically has. Instead, we saw both gold and silver virtually crash to the upside, with volatility going to these historic levels on there. So you can see the same thing on silver. You can see silver, just an extraordinary reversal. Like, it went from $120 down to a low of $70 in literally 24 hours. It was an insane move to the downside. Volatility on silver was up at 120%, and we're now still at 100%. Incredibly high vol. We're going to actually end up doing some live trading out here in Mexico City on silver, taking advantage of these big volatility premiums, something that we're going to spend some time definitely talking about. But really the question is what's next? Well, often, one thing is put on your seatbelt, because the volatility ain't going away. So for instance, silver, you should be totally expecting a $15 swing to the upside, and probably another $20 swing to the downside. There is going to be nothing orderly or calm about the way the price is going to behave here in the next week. We'll call the play-by-play. At some point, we could easily see a bounce back to $90, $95 on the upside of silver, as we potentially are going to get a bounce upwards in this manner, but that will typically be short-lived, and will often lead to some kind of, if I was to just draw you a path, it could look a lot like this for the next month. And there's after typically these kind of expansion phases in gold and silver, they go through a consolidation period that takes months. And with the type of blow off top that we saw, we are now going to be in the consolidation phase. That isn't long-term bearish. It isn't a new shorting opportunity. It is just the reality of how these markets work, and all of that super huge enthusiasm that was in gold and silver. Now it's going to be a period of resettling and finding where a longer-term fair value level is for gold and silver as we move forward. Just briefly, I want to touch on the stock markets and what you need to know going into this week. Obviously, jobs numbers came out, or not are coming out on Friday. It's the kind of big headline. Obviously, Warsh was named the new Fed chair going in the. Obviously, that's going to be in the second quarter when that transition happens. Markets obviously reacting to this, but there's obviously a couple of key things I want to highlight. One thing was we wanted to, in order for us to predict, be anticipating the S&P 500 going up to 7,400 on the upside, we needed to see a couple of things happen. And the one big one was that we needed to see the Mag 7s have a very positive earnings reaction and see many of those stocks start to participate on the upside from very oversold conditions. They needed to rally with it being 1/3 of the S&P 500 market cap weighted and 2/3 of the NASDAQ 100. Those 7 stocks are so important. And so far, it's been a nothing burger, not in a negative way, but certainly not in a bullish way. This is increasing the likelihood that we're going to see the ceiling of the stock market developing here. And the problem with the ceiling is that while capping the upside, the trigger points to the downside are creeping up below the market. Right now, the 6,800 levels are kind of level where I anticipate things like systematic traders, CTAs, and other things to pivot from being so extraordinarily net long the markets. And so we have a market that is in a safe zone right now, nothing imminent, but if it doesn't have room to go on the upside in a big way because the Mag 7s are not making that big push on the upside, then the market has got this floor that's underneath, that's creeping up behind it like a trailing stop loss that when triggered could trigger some big market volatility. We have 2 important Mag 7 earnings coming out this week with Google and Amazon. Let's see whether they can change that tide or whether or not they're going to continue this trend of a drag. But the one market I'm going to leave all of you with to wrap things up is I wanted to look at the Kospi. Now, the Kospi is the South Korean index. And it was actually the centerpiece of where the AI bubble continued over the last 2 months. While we saw NVIDIA get stuck and a lot of the Mag 7 stopped participating, what we really have seen is that all of that momentum and stock buying occurred in the Kospi. Well, the Kospi finished a measured move, and you're seeing a reversal candle coming in the South Korean index. Is this marking the pivot in flows? One day doesn't make a new trend, but this is definitely the thing I want to keep an eye on with all of you this week, because if we see the Kospi rolling over, Mag 7's not participating, I'm going to start to worry about the markets a little bit on that. The one thing right now, volatility is cheap on these markets. The VIX right now is still at the 18 handle. While we've seen a little bit of spiking in volatility, hedging and buying downside protection is still relatively affordable and something I think needs to be prioritized, and something I'm going to spend a lot of time with my inner circle out here in Mexico City, talking about how to build structural portfolio hedges and other things to make sure the downside risks of the market are being removed while we're actively trading these markets. All right, thanks everyone. This is where we're going to wrap things up. I'm here every single day, Monday through Thursday at 9:30 a.m. I'm going to be live streaming right before. We're going to continue this conversation and where's the trade? Where is our online at the Big Picture Training membership? Any of you that want to try a free trial and a look behind the curtains at what we're doing and how we're setting this up and turning all these things into trades, make sure you try a free trial and join me at Big Picture Trading. Otherwise, have a good day and I'll see you all in the morning.